Stocks have been bouncing around on Tuesday morning. Right now they're down roughly about 90 points. Although Mark Newton, he's the chief technician over at Gray Wolf Equities, he thinks that there might still be a little bit of play in that S&P. So Mark, what are you seeing in the charts that's given you that idea?
Yeah, the market's been incredibly resilient. You look at what's happened over the last couple of weeks, and equities have rallied up really on no macro or fundamental type news, and really on the expectation that this whole debt plan will go incredibly well. But there has been really no resolution, and the S&P has pushed up to levels near 1250, and as everybody knows, that's the area where things broke down from back in August. Those are levels that constitute the lows of what's called the head and shoulders pattern, the neckline, and now the S&P, the Dow, and the Dow Jones Transports have all pushed up to test that level. So right now we're seeing a little bit of backing off here, but really not much damage at all today. We've seen, bottom line is energy, industrials have all been very, very strong. We saw a little bit of a backing off in technology, but that still is okay. And surprisingly, utilities, if you look at the Dow Jones Utility Index, that broke out to new highs. And so, you'd expect that in times of market strength that you'd see utilities weaken, but those have actually been, at least on an absolute basis, they've been strong, and relatively they've hung in okay as well.
Well, we had seen those industrials come off in the last few months, people thinking that there was going to be a global slowdown, trading those stocks down, but they're starting to come in with some pretty good quarters out of these companies.
Yeah, that's true. I mean, this morning you saw a little bit of weakness in Triple M and also in UPS, but industrials have been, in general, a very strong sector. And so, if you look at the market over the next couple months, we're in a seasonally strong period. We're in a pre-election year also. So there hasn't been a negative year in a pre-election year over the last 72 years. It's really been since 1939. So those are important to keep in mind here. Seasonally, we're in a strong period. The longer we can hold up near the highs, the better the intermediate term picture will be. You have momentum indicators like MACD, which are turning back positive, technical indicators that a lot of people look at to gauge strength. If we get above 1260, is a good likelihood that this can continue up a little bit further before any correction. So a lot of people saw that we rallied on no news, and the market would automatically just pull back, and we've actually broken out to the upside and traded up to this 1250 level. My thinking is we can still probably push a little bit higher into early next week before we get any sort of consolidation to this. But the trend is increasingly becoming more and more bullish, suggesting that any pullbacks probably are going to be buying opportunities into year end. People are going to start to want to chase performance with only a couple months left. The market's starting to move up, so you have to be on board, and hedge fund managers are not going to want to be underinvested or on the sidelines at this stage. So.
All right, well, you heard that from Mark. You got to be in it to win it.